Well, hello again, Solis Wealth family. Greg Solis here with the update. First of all, happy Father's Day to all you fathers out there. I hope you had a special celebration. Father's Day special to me. Love my dad. I lost him a couple of years ago, and so it's always somewhat sentimental and emotional for me. But I know he's in a good place, and I know he's doing well. Our family's doing great. Jack, Nicole, and Emily are all cranking along nicely. They're all doing well. Emily is home, as I've mentioned before. Love having her home for the summer, but she's going to be gone in August. So it's going to be such a short period of time, but we sure love having her home. And Monica and I, we've been playing a lot of tennis and pickleball and just having a good old time. I got to be honest, I've kind of lost my mind with this pickleball thing. It's kind of been a disruptor to my life in a good way. Boy, I find myself out there playing a lot of pickleball. Great exercise, great camaraderie, and just a ton of fun. So if you haven't played pickleball, you might want to try it. It's a hoot. Market-wise, well, wow, markets just continue to crank along nicely. Not too surprised. I've been kind of a little on the bullish side here lately for a while. Lots happening with this artificial intelligence. The economy's been pretty strong. Inflation is starting to come down. We're really seeing some good signs of that. The consumer price index came out last week, and the so-called CPI, or consumer price index, was only up 3.3%. The market was anticipating it to be up 3.4% year over year. So we're starting to see a little slowdown. And then right behind that, the producer price index, the so-called PPI, is a measure of wholesale prices, actually came out. It was actually down 0.2% for the month. So that's good news. The market was actually expecting it to be up 0.1%. So we're definitely seeing inflation come under control. That allows the Fed to kind of start thinking about lowering rates sooner rather than later, although they're remaining pretty stubborn right here. They came out and said we're not ready to reduce rates just yet, but we can anticipate that it'll probably definitely happen here towards the end of the year, perhaps in September, maybe even two reductions before year end. We will see. But lower interest rates will be a good thing for both the bond market and potentially the equity market. So the market's kind of pricing a lot of this in. I think valuations are a little bit too high right now. That's my own personal take. We got price earnings multiple on the S&P 500 over 20 right now with looking at future earnings. Again, I think there's reason for that, and there's a reason why we're getting the price increase in the equity markets. But sometimes we get a little too far ahead of ourselves, and we might anticipate some pullbacks and some consolidation to just get those valuations a little bit more in line. But I'm still bullish. I still feel like the markets have, some room to go. Overall, the bond market, I think, getting good yields there. If interest rates start coming down, we'll get some price appreciation potentially in the bond market as well. So for now, everything's looking good. But again, politics, weathers, wars, pandemics, unpredictable things out there. So you never know what might happen. But for now, the fundamentals look good. But hang on tight. We're going to have some volatility along the way. I hope you and your family are doing well. Again, happy Father's Day. Look forward to seeing you all real soon. Take care and God bless.